Thanks for taking a preview of our webinar special here. This is, of course, going to cover the Thursday, June 9th WASDE report here. This is our normal supply and demand report here. And this one will cover general changes here seen in old crop in terms of changes in demand. There will be some minor new crop changes, which we will discuss here in the coming slides here. As far as corn goes, we do have some demand changes, as I mentioned, and these will be mostly old crop demand changes here. One thing we can point out is in recent weeks, you can tell during May, for instance, or I should say in April, for instance, we did have a few weeks in a row, about 4 weeks in a row, where we'd had a significant decline from normal. And here the red line is the actual numbers. The blue dots, these are normal. So we had a significant difference from normal in terms of sales. However, the past 3 weeks have seen sales rebound. We're only running about 10 to 15% lower than last year. So we do expect a drop in export demand for old crop, like most of the trades certainly will. But as I said before, with numbers being so close to numbers being so close to normal now in recent weeks, it should not be a significant decline here. So net is going to be a small decline for corn export sales. For ethanol, there are some perceptions in the industry that the tight old crop situation in terms of supplies coming for the month of August will mean a lower ethanol production number. However, keep in mind, most of these plants actually have already procured their corn about 3 months ahead of time and also worked on a sales price for ethanol. So the margins and supplies they have for this tight period, in most cases, are actually already taken care of. Also want to point out by this chart, you can tell this is ethanol plant profits, and this is the latest numbers through May. They are making marginal profits. These are not large numbers by historical standards at all. They're just more or less like a 4 to 8% return on investment. But bottom line for these plants is we are still running with profits right now, and there is still incentive to run the plants if they can find the corn. And this is shown by this chart here, weekly ethanol production numbers. In the past 3 weeks, we have seen numbers rebound. We're up to 909,000 barrels per day at a daily pace here, and that was the latest number here. As you can tell, during April, we did have some slowdowns in demand. We had 4 weeks in a row where we had some slowdowns. And I won't say it's incorrect to call that a slowdown in demand. Those are actually more due to plant maintenance issues here. But bottom line here is if we keep 900,000 barrels per day pace from now through August, we're actually going to beat USDA by a full 71 million bushels. So bottom line for ethanol, we're doing great right now, and we don't see any major problems at all with ethanol. In fact, we look for a slight increase in ethanol production on next Thursday's report. Now, you do have some people saying in the industry, well, we have some the current numbers are not going to meet USDA's hopes. We're running behind. And actually, this next chart here shows some of these mistakes that we see throughout the industry here. Well, what efficiency level are you plugging in with when you see these weekly ethanol numbers here? And the green line is what USDA has been using in terms of efficiency levels, about 2.76 bushels, I should say gallons created per bushel of corn used. And you will have some people using a higher number, 2.8 or above. So if you have some people suggesting there is a change here in terms of some problems in ethanol, it's related to the efficiency number that they're using here. We use simply USDA's numbers just because that's what they make the reports, and that's what they're going to focus in on here. The third factor here is for feed usage. Of course, we have seen feed usage lowered in the past 2 reports, April and May, for corn. So we have some problems there. People suggesting both increased feed wheat we use instead of corn. Secondary, we'll also see some higher DDG usage. And both those certainly will happen. But we've got to point out there's only a certain availability of those products. You're still going to use corn as the vast bulk of your feed source. And since the May report, we've just seen nothing but actually increases in our estimates here for livestock production here during summer. As this chart shows, the largest feed center, cattle, we now have cattle on feed running over 7% higher than last year. Chicken supplies have been higher here for many months, but we will point out that at least for late June, I should say more into July, we will see production decline. So we do have a negative number for chicken and a higher number for hogs here. But net feed use is going to be about 2 to 3% higher than last year. So bottom line here is, with the extra numbers that we've seen now in the past 2 weeks hitting this market, we do think that feed use actually needs to be raised a little bit here for corn. So net, we have a decline for old crop stocks because we have 2 of the 3 demand centers posting a positive increase. Now the big argument comes on acreage and yield here for new crop issues here. For new crop, we got to point out here, at least as far as these acreage numbers, typically, at least in recent years, USDA has not made acreage changes on this June report. Usually they wait until the June 30th acreage report. Now let's look at the years with moderate planting problems, and these are now shown with the circles here. As you can point out, well, 2 of the past 5 years have seen declines on this June 12th or June 9th supply-demand report. In other words, USDA has been pretty proactive. However, just look at the past 3 or in fact 4 years of moderate planting problems, which this year is considered a moderate planting problem year. Only one of those years, 2002, saw USDA be very proactive here with this number here. Interesting to see, we have had 2 years with very significant planting problems, 1993 and 95. And interesting there, we only had them, USDA only made 1 change in those 2 years here. So bottom line in terms of what we expect, USDA, we all know, will be dropping corn acres. The only question is whether it happens right now in this report. For ourselves, at least, we're going to be conservative and say, you know what, due to recent history, the past 3 to 4 late planting years, and the fact USDA only made 1 change in those 4 years, we don't expect acres to be changed on this report. They certainly will be changed on the June 30th planted acres report. For yield, USDA has been more proactive in recent years. Here's those same 5 years on this chart, now circled here, where we've had moderate planting problems. And just look, the past 3 of these planting problem years, USDA has been very proactive in changing yields. So there's no doubt in our mind, at least, that USDA will make some changes on yields on next Thursday's report. Also of interest, those same 2 years with significant planting problems, 93, 95, USDA only made 1 change on those 2 here. But bottom line for the changes we expect for new crop, yes, they will adjust yield. We've been very, very conservative with our yield numbers. As you can tell by these previous years, you can see a change anywhere from 2 to 5 bushels, pretty easy here. We're going to be very conservative, only suggest about a 1 bushel change. So keep in mind, Allendale's new crop numbers are going to be conservative here. So what does all this mean? I want to point out here, first of all, our numbers in the comment here in the upper right-hand corner, estimate for this report. And we are not changing acres. We are changing a minor change in yield. So as I said before, we're going to drop ending stocks. If you look at the 2010 Allendale column, that's 708 million bushels for ending stocks. We expect a decline in old crop, and we do expect a slightly lower number for new crop, 848. Now, in the upper right-hand corner, we now have, it says, Allendale's working numbers. We do have a 1.1 million acre adjustment is what we expect for right now, and that will bring this new crop ending stock down to about 701 and give us about a 5.3 ending stocks to use. And if you compare that with this last year, with the old crop year we're currently in, that's actually a tighter ending stock and tighter stocks to use. So without being too outlandish, as I said, only a 1 bushel drop in yield, our actual numbers, or we're making price projections from, suggest that stocks are tighter than this old crop year, and therefore price obviously needs to be significantly higher. Now we will make some points in the coming weeks about yield, about what cool summers do to yields, and they will be surprising. But for right now, the market is focused on this bullish picture here, the fact that new crop stocks could easily drop to tight old crop levels here. For soybeans, as far as numbers, you're not going to see many major changes for new crop. This is going to be an old crop-based demand report here. For crush, we will point out that in order to meet USDA's hopes, we have to run a 4% crush rate for the months May through August for the rest of the year. And as you can see in recent months, we haven't been anywhere near a 4% lower crush rate. So we do expect crush to be lowered here. We think USDA is a little optimistic. For export sales, as far as these numbers here, as you can tell by this chart, we have been lower in terms of, we've been less than normal in the past few weeks, but these aren't really surprising. USDA has already factored this in the numbers here. So in terms of export sales, we do expect a slight increase, as you can tell by the row which says export. We do have a 10, or say no change here in the no change in the old crop export number here. We do have a drop here for the crush number, dropping to 1.635. Bottom line for old crop, we have a slight increase from 170 to 185 million bushels, and the new crop we expect a similar increase here. And keep in mind, let's go back to this slide real quick here. I have not changed acres or yield on this report. USDA almost always waits until the June 30th report. So don't expect this this report to have a bullish number here for soybeans. Over on wheat, we just have some simple points right here. USDA will make some moderate changes in supply here. Of course, the official new crop year actually started here. We've got May 30th, 31st is the end of the old crop, and therefore June 1st is the start of the new crop year. USDA will make a change here, as they usually do here during during problematic years. We expect a slight 0.6% decline in yield. That sounds great, and it certainly is going to be a focus here for the trade. However, USDA does have some other problems that they will have to recognize on this report. Number one, let's just look at these at Ukraine, for instance. USDA has a rebound in wheat exports plugged in for this year, 8.5 million tons. The trade is actually talking higher numbers, 10 million tons on up. So number one, we're going to have some problems on our export side with a new competitor, Ukraine. Number two, well, let's look at the same chart, but for Russia. USDA last month was using 10 million tons. You do have groups calling for 13 to 15 million tons, pretty easy. So bottom line is, though we may see a yield adjustment on this report, as you can tell by our column, 2011 Allendale, we do have a lower yield number, 42.1. However, if you look down at the export row, near the lower end of this sheet here, 975. We significantly changed our export side because USDA probably will be raising export numbers in production for some of these Eastern European countries. Part of that will be offset certainly by the drop in EU production and Canada, but bottom line, at least for exports, we think the USDA will be, or US will be running into some trouble on that end. So we expect a slight increase, 702 to 722 for new crop wheat stocks. So bottom line with this report, this will certainly be a corn-based report. USDA will be active in making adjustments not just on old crop, but also on new crop. And also keep in mind, this is only the first step in adjustments for corn. USDA will make adjustments on acres, certainly, on the June 30th report here. So for the net picture here, this is still going to show a tightening of corn supplies. Beans and wheat, this is not going to be a major bullish report here. So as far as this goes, we will have some interesting facts on our acreage estimates coming in the coming weeks. Also very important for you guys to watch will be the yield arguments for corn. Everybody has this idea that corn yields will be falling. That certainly is a key factor here in many of the trade's perception. But we're going to have some interesting facts on this in the coming weeks. So let's look at this report from a bullish perspective for the very short term. If you have any questions, give us a call, 1-800-262-7538. Thank you.